Good evening, everybody. Hope everybody's having a nice fall evening. Tonight we've got Greg Herlean with us. He's got some interesting perspectives on real estate debt and your self-directed IRA. So this will give people some additional information and different perspectives on how to increase your estate. So with that, Greg, welcome to the Candlestick Forum. We're very anxious to hear your information tonight.
Well, thanks, Steve. I appreciate you and appreciate you coming back on again. It's been a little while, and I can tell you, we've only talked a couple times since, but from the last time, there's a lot of people that we've been working with that have been doing the things we talked about last time, and they're getting these passive checks I'm going to talk about here in a second. So thanks again, and look forward to seeing if this is a good fit for many of you as well on the call today. So I'm going to jump right into it today. I'm going to cover two subjects. The first subject you might think you've heard of and you've heard all the ins and outs of, and frankly, at times people think it's a boring subject. But if you bear with me on it, it's actually not quite that boring. It's something that will change completely the way you're paying taxes and help you make more money. And so let me go through that part first, and then I'm going to go over through another section, the second part, that's going to talk about debt and what many people are doing right now to beat a lot of times the stock market, not always, but another way of creating a lot of income passively and in a secure fashion. And so something I've been doing for over 19 years now, and it's worked really, really well. And at this point, I can tell you there's lots of people I've met through Mr. Bigelow here that have had a lot of success as well. And so I'm going to go through it pretty quickly. Especially in the beginning, because I don't want to dry you with too much information that is that's overwhelming. I want to really focus in on things that you probably haven't heard about before. I know these things will be new to you because it is for about 98% of the people I talk to. And then I got a gift for everybody here on the end of the call. I'm going to do it in 30, 40 minutes, leave with some good questions and answers hopefully at the end, and get you guys on to enjoy the rest of your Thursday evening. So let me just, before I get started here, the things I'm going to talk about are going to show you how to use other people's money if you choose to, or more importantly, I think for most of you on this call, how to make more money and pay way less in taxes and really diversify your funds. And the things I'm going to talk about as well, you can do all within 30 days. This is not a hard process, something that's going to take you a very long time to do, or lots of books you got to read. We've really made it simple. I got over 6,400 clients now that work this program on a monthly basis, and we've been doing it again for a really long time. So let me jump into. Let me go here to the next. Just real quick, I don't want to spend too much time with me either. I've been doing this for over 15 years. Wrote a couple books. One called Bank on This, the other called Flip Bank Live. I got a partner. We do a lot of who's been on reality TV shows, flipping real estate. He talks a lot about the rehab side. I talk a lot about the money side, how to create passive income. I've been doing it for a little while. As well as I've lent over $1 billion in real estate. So I focus primarily on passive money, how to create passive monthly checks to myself and to my investors. And so most importantly, that last thing you see in there, Father, here's my crew. I'll jump right into it, but I am a family man. This is, excuse me, definitely my why. And yes, I'm going to answer all the questions at the end. How to avoid paying taxes, and this has all been legal. This has happened. I see it for over 30 years, these different strategies. This is nothing new, but most people don't know about it. And I'm going to tell you why they don't know about it here in a second. So let me go on here. So before I jump too far into this, I wanted to give you a stat that I got from the Social Security Administration, which is staggering, frankly. Look at this. Only 3, 4, 5% of the people are financially secure. And what does that mean? Let me go back real quick. Financially secure, the definition of that is having $3,500 a month coming in. That's what financially secure means. So to me, that doesn't seem very financially secure, but that's what the definition is to them, financially secure. That is a huge problem. So how do we prepare better for retirement? How do we create this passive income? We're going to talk about it, and also we're obviously going to talk about all the safety and security that comes with it. So when looking to invest, there's obviously things you can do to protect yourself and make better returns. One thing obviously is we want to obviously beat inflation. If your money's just sitting in a bank account, I don't think I need to convince any of you. You guys do a lot of trading and have a lot of success. The longer your money sits in a bank account, the more inflation there is. I'm going to go quickly through this part because it's not as exciting here talking about inflation and things, but it's important for you to understand volatility. What if there's a way to eliminate or to to get rid of a lot of the ups and downs? I'm going to teach you how to get rid of a lot of the ups and downs and keep it more of a consistent, safe way of making money. So by doing this, by avoiding the volatility and the inflation, the next thing also we want to avoid is how do we avoid paying as much in taxes, and maybe entirely in taxes. And I know you saw that maybe in the first slide. There are ways to actually avoid entirely all your gains in certain investments that you're making. We're going to talk about that as well. So real quick, a self-directed IRA, what is it? I should go to this slide first. It's basically a descriptive term. It's not a legal term. It is a vehicle in which the IRS has approved over 35 years ago, which allows investors or individuals to hold their IRAs and self-direct it, meaning put their funds where they want to, with very few prohibited transactions. There's very few prohibited things you can do. For example, you can't buy insurance policies, you can't buy arts and collectibles, and you can't invest in your own residential or in a vacation home. There's very few. Besides that, almost anything is fair game. And so we've been able to teach with our trust company. We have over 10,000 individuals that self-direct every single day and really are taking advantage of making their gains inside the stock market, doing their trades inside their IRAs and Roths, taking control of it, which is set up for those, especially, I'm very familiar with the strategies that Mr. Bigelow has gone over, and it teaches many people. You can do those things with inside of a self-directed IRA. I want to talk about that stat that's here that's important is only 4% of Americans, 4% self-direct their funds. There's over 79 actually now. This stat's a little old now after 18 months. Over 79 million IRA account holders, which is over $4.7 trillion in IRAs in the United States. This is not including 401ks. This is just primarily, or not primarily, only IRAs. So why is there only 4% self-directing? The big answer to that, in moving people moving their IRAs into a self-directed IRA rather than with their Charles Schwab or the regular traditional broker-dealer, is the financial advisor hasn't advised them, hasn't told them, hasn't given them their options. They're not going to tell you about your options of moving your money and putting it in somewhere that you can control and you can invest where you want, because then they lose out on their fees. That is the number one reason why you have not heard about this. They do not want you doing this. Number two, it's not for everybody. For individuals who definitely don't want to take a little more hands-on approach and look at their investments and make directions and make decisions on their investments, and they just want someone else to do it for them, this is not the place for them as well. So moving along here on the self-directed, there's some pretty cool things about it. On a side note, I started a trust company years ago called Horizon Trust Company. We're licensed, bonded, insured. Again, this is not a sales pitch for them. I want you to understand the ins and outs of self-directing and how you can actually avoid paying so much in taxes. And if you use any trust company out there, a self-directed trust company, more power to you. I want you to go out and take control and make bigger returns. Or do whatever you're doing right now to make money, be it in the stock market or elsewhere, but do it inside of your IRA. And especially if you can do it inside of a Roth IRA, which we'll talk about, will really change the way you're making money. There's a couple different steps I want to go over about creating wealth and doing what a lot of the wealthy have been doing over for years in the self-directed bucket. This is an example of my first deal. When I was actually, if you're losing audio, I just saw something here. Let me see if that's better. Let me know if that's better, Robin. Hopefully that's better for you as far as losing audio. I just adjusted the mic. There we go. All right, thank you. So perfect. All right, so I was just looking at sound, make sure everyone can hear me. This was my first deal in a self-directed IRA. I did inside of, actually someone else lent me from their IRA 17 years ago now, and out of their self-directed IRA, they lent me $60,000. When they lent that $60,000, they bought this property. I was the buyer. They lent the money, and I flipped it. I rehabbed it, and after I rehabbed it, I sold it, and I gave him 75% of my profits. He ended up getting a $12,000 return in 3 months on a $60,000. I got a $4,000 return. I can tell you after that first deal, I changed the terms after 2 or 3 deals, and we ended up being 50-50. Years later, it was 25 to him and 75 to me, and then years after that, he ended up giving me his money out of his IRA for 8% as I flipped from real estate. I flipped over 450 properties over the years in a couple of hotels. But I share this with you because this is one way in which individuals can actually take control of their funds and invest, either being a lender or a banker like the gentleman did for me in the beginning, or if you're looking for funds, a place for you to go find funds to do your first deals. And that could even be in the stock market. I've had a lot of successful partners and also investors that are doing a lot of both banking and lending, and also some are flipping, but a lot of stock investing as well. This is one of the other properties I did. I just think it's more funny, but I remember walking in this place and we bought this property to rehab, and everyone's like, "Man, you made all that money in recycling." And actually, I asked the question, why wasn't I invited to that party? That's as good as my jokes get, though. So, has this been around? Someone actually already, I noticed a comment about this. Yes, it's been around for a long time. Self-directing, you can self-direct. IRS has allowed that for a long time, and here's the restrictions I mentioned before. Art, stamps, rugs, antiques, collectibles, insurance policies. Those are the things you cannot invest in that are not permitted. So let me give you an example of an individual that would use his funds or her funds to be in the stock market or real estate, or you can invest in businesses. And the difference between doing it inside a self-directed IRA and outside of a self-directed IRA. So in this example, Tim Banks, 40-year-old, 25 years from retirement, he's got $45,000 in his Roth. What does he look like if he does it inside or outside? For those in the stock market, or again, you pick the investment, whatever you choose to be doing. Those doing it inside a self-directed Roth IRA or outside of an IRA, look at the difference. It's a $600,000 difference. $600,000 difference just by doing the things you're probably already doing, but doing it inside of the self-directed IRA. And if you notice, it's a Roth. So when this guy, Mr. Banks, in this example, when he goes to retire, or at the age of 59 and a half or older, he can take out those funds all tax-free because it's Roth money. This is powerful stuff for those of you that need money today but also want to defer money and not pay as much in taxes. You can be trading and doing real estate and debt and different investments and businesses both inside and outside of your IRA. If you do it outside of your IRA, that's the money you should be living off of and paying your bills. Obviously, if you do it inside your IRA, you can't touch it till at least 59 and a half. Let's see here. So a couple things that people thought they knew, or at least understood about Roths, which is not true actually. If you just want to open up a Roth, and some people think, oh, I can't do a Roth, I make too much money. There's actually something called a 401k that we can open up for you with a Roth bucket, which if you open up a 401k with us at Horizon Trust and put a Roth bucket in there for yourself, I have one of these for myself individually, I can actually put up to $52,000 a year into my Roth. And it doesn't matter how much money I make. I make more money than the limits if I was just to go open up a traditional Roth. I couldn't open up one. But if I have a 401k and create a Roth bucket, you can do so. So for those of you who make too much money or think you make too much money, there's still a way for you to actually avoid paying all these taxes and do it inside of these Roth buckets. It's a little bit of a mouthful, a 401k with a Roth bucket. It's okay. One of the gifts I'm going to give you at the end of this is an hour consultation, a one-on-one with my staff that are very educated that will teach you how to open up these accounts and how they work for you in your individual circumstance. So, well, here it is. Here's what I just said. Sorry, I don't state a script. The next slide here. You can actually put more than $5,000 or $5,500 or $6,500 per year in your Roth IRA by opening up a 401k, self-directed 401k with a Roth bucket attached to it. Again, these are things that have been around for a long, long time. If you currently have a 401k, I definitely want to talk about that real quick. If you have a 401k and you it's your current employer, I mean you're still working there right now, you cannot roll over your 401k into a self-directed IRA unless you're 59 and a half or older. So for those of you who have a current 401k, you cannot roll it quite yet into the self-directed bucket. That's a good question. I just noticed it just popped up. It's one I want to cover. It's important that you understand. You definitely have to have a IRA or an old 401k from a previous employer, or you can start an IRA from scratch anyone on this line as well, and start doing your investing through a new account. And you can have several accounts. If you already have a Roth account, or let's say you have a $200,000 IRA right now, and you're like, you know what, I want to leave half of my financial advisor or wherever it's at, but I'll move the other half in self-directed. You can do that as well. There's no issue with that. So I'll move on here. And there's no limit on how much you make. And here's an interesting example. I've done some wholesaling. Let me give an example of wholesaling real estate. So rather than me putting a piece of property or a home investment property under contract in my name or my LLC, I put it underneath as the buyer as Horizon Trust, FBO Greg Herlean, my name. So my IRA puts a property under contract and puts a deposit down of $1,000, $2,000, $3,000, $5,000. Can do that. And then I can sell, as that IRA can sell that contract to somebody else, called wholesaling. So that $2,000 contract, or earnest deposit that I can put down on a piece of property, I can sell it, let's say, to Steve Bigelow here, and he could buy it from me for $10,000 within a week or 30 days. My $2,000 turns to $10,000. It's a 400% rate of return in a 1-month period, and that money would be sent directly to my self-directed IRA. Okay. Self-directed kind of came up. I only mentioned this because it was big news back when Romney was running, and after he ran all his IRAs and how they got so big, he obviously invested his own IRA into his businesses as well. That is one thing you can do. You can also self-direct your funds into your businesses. But there is definitely some more tape to that and how that works, and from an accounting perspective and also from a legal perspective. But we do help all the time individuals open up their IRA accounts or roll them over and fund their new business. It happens all the time. But you can invest as a self-directed IRA almost in anything. There's very few exceptions. Again, my team will help. I'm going to talk to you about here in a minute the number one thing that I have done over my career, as well as what I see most people enjoy doing in a passive way, getting really good, solid returns inside their IRA, their self-directed IRA, and also outside their self-directed IRA. There's definitely a difference by doing this inside of your IRA, or in a taxable account or in a Roth account. You do it obviously in a Roth, it just compounds so much quicker. If you do it outside and you just do it in cash and you pay taxes every single year, there's millions of dollar difference. And as I move through this, I know I'm moving through it quickly, so I will slow down here in some of these principles that I think you might not have heard before, which is this one right here. If you decide and you're looking to open up a self-directed 401k, which again we can do for entrepreneurs and self-employed individuals with LLCs, you can put away larger contributions, and you can also borrow against your account. So you can borrow 50% or $50,000, whichever is lesser, and use it for anything you want. Heck, you can go on a vacation if you want. You just got to pay it back within 5 years. But you can invest it as well. And so we have people that will borrow the money out, and they just got to pay it back within 5 years, and you have to pay back yourself basically, and the rate you pay yourself is prime plus 1. So do the math there. So all of a sudden now, let's say you borrow the money. Let's just say you're paying 4% or even 5%. You pay that full 5% on the money you borrow, your own money that you borrow, back to your IRA. Your IRA, or your 401k in this case, earns that interest. So it's basically, for all intents and purposes, it's a free loan. So if you're paying 15, 20% some expensive loans, it's one creative way of actually paying off those debts and not having to pay taxes on it. Because a lot of people, when they get these big debts, they cash out their IRAs. They get all these penalties. That is definitely not the direction you want to go. So you can definitely create your own business and personal line of credit with a 401k. This is, again, a self-directed 401k that we can help you with at Horizon Trust Company. So those individuals that want to open up a 401k, you basically have to have an intent to make money and have some kind of business, LLC, LP, or a C corp. It's pretty simple. And as I mentioned at the beginning, my first deal in real estate when I was 23 years old, I learned the power of this self-directing because an individual used all of his money, not all of it, but it gave me a portion of his money, $60,000 to do my first deal, and I didn't have to go to a bank. Banks getting a bank loan and approval on a deal, you can lose the deal by the time the bank approves. Banks don't approve loans very quickly, and I can create my own terms. So I'm not having to, I can find an individual that has an IRA or a 401k, create the terms with them, the terms in which I want to pay that he's comfortable with or she's comfortable with, and then the instrument is we create a promissory or a debt note, and they then loan the funds to me, and in return we have either an equity deal or an interest rate deal. So there's so many IRAs, over 79 million IRAs in the United States, over $4 trillion is in those IRAs. There's money everywhere. So for those of you who are looking for money, that is definitely a good place for it. But for those of you who have money, places now that I'm at where I've created a lot of money and assets and wealth through some banking strategies I'm going to talk about here in a second. That's the direction I've gone, and because in the beginning I didn't have money, and I had to build my business and build my wealth, and so I did that, helping others, but also people helping me fund my first deals. And now I'm in a position where I can actually be the banker and lender, and we'll talk about that. A common question I get all the time is, can you still invest in the stock markets in your self-directed IRA? Absolutely, you still can do that. That's not an issue. So now we'll talk about, inside your IRA, you can protect it primarily through avoiding all these taxes. You avoid all these taxes by creating this Roth IRA or an individual IRA, and avoid completely all the taxes you're paying on any of these gains that you've been making. The way of doing this is creating a self-directed account. You put money into it, and then you create we've got a form that you fill out saying, please send my funds to XYZ, trading company or XYZ real estate or title company. It's a very simple process. We help you do it. What's another way of putting money into your IRA? If you want to open up an IRA or create a self-directed IRA, you can contribute to it. So for you new people, you can contribute your minimums or maximums, and up to $5,500 typically, or $6,500. Or you can roll it over or transfer the funds. This is the major ways in which most of our clients start self-directed. They move over funds from their retirement accounts, wherever they may be, into a self-directed Horizon Trust Company account. We do this on a daily basis. Several every single day, people are moving over and putting money into their self-directed IRA account. We have a lot of our self-directed IRA holders aren't as proactive as you might think. They're not the ones necessarily doing all of the deals or finding the real estate. They're more the investors. They're investing in LLCs or in businesses that are doing those things. But some things that they understand better. I meet so many individuals that give money to their financial advisor and have no idea where it's going, and their financial advisor's the only one really making the fees, no matter what the market does. And so this is definitely a unique way of investing in things that you understand and appreciate. So Horizon Trust, we've been around for a while. If you're looking for a self-directed IRA company, we'd love to earn your business. Again, you can go anywhere. I've got a gift here at the end that I'm going to give to everybody, in which it definitely financially makes sense to have a self-directed IRA with us. But we've been doing it for a very long time, and our goal is really to help you invest whatever you want to be investing in, and that's for you to decide. So, self-directing. So it's simple. It's been around for a long time, and we help you do it. It's really up to you to pick which IRA is right for you. Traditional, Roth, you get to pick whichever is best for you based upon what kind of taxable liability you want. If you want the Roth, obviously you're paying taxes now, but you're not paying it along the way, nor when it comes out. Or you're going to pick the other account where it is the traditional IRA, where you get the tax write-off today, but then when you pull out your funds later, you will then pay taxes. So it's easy, simple. We actually fill it all out for you on the phone with a 5 or 10 minute conversation. Open up the account, get it funded, and start investing. Simple, 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 because the way we do it. So let me talk about, I want to jump to the next part here. Creating a bank. Many people now that we've talked to and I've trained and have gone through a lot of the different courses and education I've given have talked about, what is a solution or a strategy in which one can make money in a passive way but in a secure way. Like I said, I've flipped a lot of properties. I've done all kinds of things, and one thing that I've learned over the years is the guy lending me the money worked less than me, was always in a safe and in a secure position, and always got paid first. Over the years, as I built my money, I built my accounts, I knew that I wanted to create a bank. And so this picture always makes me laugh, and this is one of the things that made me want to create a bank. Is I remember we've all seen this, right? Going into a bank, and you'll see at one counter it says, you know, come give us your money. We'll pay you 0.45% of your money, and they're like all excited about it, like they're doing you a favor. And then months later, you go back to borrow money. As you do so, they're going to give you back your money, plus maybe your neighbors and other people's accounts' monies, obviously, at 4.5%. And they're ecstatic about it, man. They're like, here, have the money. It's so cheap. Really, they're just giving you back your money. I learned at the young age that I wanted to create this. I wanted to create a bank, and this is what I've done now. And I have created a way in which I can truly have passive money in a safe and secure way. So, how is that? This is the second part of the subject, and everything I'm going to talk about right now, you can do inside of your IRA or outside of your IRA. So it does not have to be one or the other. Obviously, if you do it inside of your IRA, your self-directed IRA, you don't pay taxes on it. All the income goes into your IRA. If you do it outside your IRA, checks get sent to you every single month, and you pay normal, ordinary income tax rate on the interest that's earned when you are the lender. So what I'm going to talk about for a little bit here, for a few minutes before we close with some questions, is the mortgage, lending. There's basically a couple parts of lending, and it's typically a loan amount, the interest rate, and the term and the collateral. The term typically what I lend on and my investors lend on are anywhere from 6 months to 24 months. The collateral is always the real estate. We don't do business lending. We don't do cars or anything like that. We lend based on the collateral, on the asset. And then there's interest rate that's affixed to it, and there's a loan amount. The interest rate is typically anywhere from 6% on the low end and 12% on the high end. I would say the average is right there in the middle. Most of our deals that we see that our clients are making are between 8 and 9%. A lot of people are doing their own little loans, and negotiating their own terms, which you can do as well. Here's a great example. Someone that's borrowing on a property that's worth $86,000. They want to borrow $45,000. They want to close on it really quickly. They're willing to pay a higher interest rate typically because they got a great deal and they want to close on it quickly. So they come to companies like mine that's been around for a long time. They say, hey, look, we want you to underwrite this deal. Can you lend us the $45,000? We look at it, we negotiate it, and make sure it's safe, and we make sure that there's no liens on the property, and then we create a lien, a first lien position for all of our investors. In this example, let's say Steve and I both put up $22,500. Him and I each would own 50% of this first lien on this property of $45,000. This is the kind of deal that happens all of the time, except they're way bigger. Typically $1 million or $2 or $3 million are our loan sizes that we're doing. Here's an example of many individuals that work with us. They're in their 50s. They're 10 years from retirement. They only have $350,000 left in their account. They're not super experienced investors, and they don't want an active role. They have full-time jobs, or they just don't want to be doing those kind of role. The bank, the bank of CMM Jones here. So they decided, look, they want to invest into real estate. So as they invest in real estate, and these notes that I'm talking about, these mortgage-backed notes that are in first lien positions, they look at the different loan amounts, the terms, and the collateral. Okay, let's see what they'll do. Based on $350,000 at a 9% rate, adding their normal annual distributions in a 10-year period, they have over $1 million. That's in 10 years. That's the power of getting a fixed interest rate of 9%. Beating the stock market. These are the kind of returns that we've had year after year after year. There was 2 years, actually 2.5 years, where it didn't happen, when it got crushed in 2007 and 8. All the other years, we've consistently got these kind of returns. And the nice thing about this, as far as risk goes, the whole time, when in this example, Charles and Mary Jones, they were in a first position on real estate. Their names were on title. They could look up in the recorder's office. They're on title in a first position. It's a game changer. You too can grow your own bank. You too can invest. The minimum is $25,000, but you can invest at $25,000. Start lending, being a banker with your IRA or outside of your IRA, and start getting these monthly returns. It pays you every single month over a 6 to 24-month period. And then it pays off, and then typically people reinvest. But in this example, when these guys go to retire, the 10-year period, with $1 million in there at 9% rate of return, that's a $92,000 rate annual income. That's over $7,500 a monthly income passively. So every month they're getting a check for $7,600, and their $1 million in their retirement account is not changing, not going down at all. They are not going to outlive their retirement. I can't tell you how many individuals that I have met who do not they're not prepared and they outlive the retirement funds. So what happens, Ron? What happens when the lender defaults? Well, you're in first position. So let's talk about that. So in this example, when we're lending, we typically lend, and me and also a lot of our investors, the loans that we're lending on, we lend between 60 and 75% loan to value. So what does that mean? That means if there is a default, which we've had one default, our company in the last 5 years, and then the 2007 and 8, we had almost every loan go to default, as every loan company did. And then before that, we only less than 1% would go to default, to give you some stats. But what happens if they go to default? So in this example, let's take a home, $100,000 home. Let's say that is worth, let's just say it's worth $100,000, easy number. And Charles and Mary here in this example put $75,000 in that deal. The borrower stops making payments. CapSource, we on behalf of the investors, begin the default foreclosure process. First, obviously, we want to make them current. But if they are current, or are not current, we ask them to get current. If they don't, then we file foreclosure. We take the property back on behalf of you. You guys end up owning the property, and now you have this property that we either sell. Hopefully, it's worth more than $75,000. But let's say the market drops 30 or 40%. First, what I would say to you is, if you left your money in the stock market or anywhere else, frankly, it doesn't matter where you put it. If real estate drops another 30 or 40% again today, everything's going to drop. But at least you have a piece of real estate. So now you just take rental income. So now you own this property. There's rental income. You get the monthly checks until you can go and sell it for at least $75,000. The nice thing, the security that you have, as a lender, is you are entitled first position. That is the most important thing. So you end up owning a property. But that is not our goal. A lot of people say, oh, yeah, we loan to own. Not true. We want to lend to borrowers who are going to pay us off. We want monthly checks in a safe position paying us off. We've been doing it long enough that we have consistent borrowers that come to our company that we work with all the time that pay us off. Those are the kind of guys we don't want to loan to own. We don't want them to go to default. That is not our goal. In fact, we'd rather have a lower interest rate and make sure they can cover their debt service than something that's too high that they cannot afford. So, creating this bank, anyone can do it. Everyone should do it. The two companies that I'll talk about here in a second, just to give you some clarification as far as what I focus on, is First Horizon Trust Company, self-directed, completely separate company out of Albuquerque, New Mexico, and they are regulated by the banking division, financial banking division of New Mexico, and then there's the lending company, the hard money lending company called CapSource, based out of Nevada. Las Vegas, Nevada, that's been licensed there for over 19 years. Both companies are audited every single year. So, really the benefits, I don't want to get into the benefits of the formula, because I feel like the formula is the formula you create. Whatever it is that you're looking for. If you're looking to invest in real estate, your own real estate, someone else's real estate, you can do all that with inside your self-directed IRA. So what I want to do, I'm going to wrap up with a couple of comments here, but also give you a gift. Everyone here on the phone, I want to give you a gift, which is first, everyone's going to get a one-on-one consultation. I'm going to give you the information to go here and inquire online, or give us a call and leave us a voicemail. We'll get back to you. But you're going to get a one-on-one consultation with my team that I talk to and that meet with me every single day and every week. You're also going to get my book, Bank on This, and also a guide, a self-directed, self-made success get started guide. That's a lot of S's. You'll get that guide in my book, and then I'm also going to waive your setup fee. So no one asked that question quite yet. I was going to jump to that. What is a IRA, self-directed IRA fee? Typically, there's a setup fee anywhere from $150 to $300, which I just told you I'm going to waive for any of those that want to open up a self-directed IRA with us. We will waive your setup fee, and then there's an annual fee. The annual fee is based upon your account value. It's a minimum of $225. But it's 60 to 70 basis points. The bigger your IRA, the lesser the fee. So you'll be at 50 basis points if your IRA is really large. What is 50 basis points? It's 0.5%. 70 basis points is almost 0.75%. If you notice, all those things I'm telling you is a lot less than anywhere else you're paying if you're with a financial advisor or a broker. If you're doing a lot of your own trades, obviously it's cheaper. But for self-directing, now that you're getting these self-directing, typically our clients are making bigger returns. They're making 1, 2, 3, 4, 5% more per year. So if they have to pay a fee of 50 or 70 basis points, which is less than 1%, that should never be your holdup on why you want to self-direct. When you self-direct, you're making bigger and typically safer returns because you're investing in what you understand. So what I want to do is I want to give this gift to everyone here that inquires. You're going to go to gregherlean.com, and I'm going to answer questions here. I'll have plenty of time for questions. kind of went a little too quick probably. But you can go to gregherlean.com/Bigelow, and right there, give us your information, and we will send you that gift, the book, the Get Started kit, as well as the waiver for your setup fees. Then also you can call us and leave a voicemail at 888-226-6022. Again, it's 888-226-6022. And so you're going to get these gifts. We're going to waive your setup fee, and I'm going to get these books and kits out to you. And then you get it over to us. We're going to teach you first about what's the right kind of self-directed IRA for you. We'll educate you on that and figure out what you're looking for and what kind of IRA account you have right now. Or the other thing that you can do is, but also for those of you who want to learn more about banking and how that works and become one of our clients, we're going to teach you about that as well. We've got many clients and individuals that have worked with us through this webinar actually that have come and now they're getting monthly checks. They get consistent monthly checks. They're not having to go rehab the property. They're not having to go look at those properties I was showing in the beginning. They're the ones lending. And so that's what I do now is I focus on the lending. As I focus on lending, I'm able to get these monthly checks that are consistent. It's a perfect complement for you individuals that are trading the stock market. I love, I've got so many friends and myself that enjoy trading and do so well in trading. This is the complement for trading, creating a passive way that's avoiding taxes altogether or deferring taxes altogether using a self-directed IRA and doing it in a banking lending position and then taking a more active role on all of your stock trades. There's passion behind it. There's fun. It's fun to do these different trades. And so it's a nice way to complement and create truly passive, secure way of making money in the debt, being a banker. And so, again, I'm sorry if I went a little too quick. I get excited about it. And, more importantly, a gift here I'm giving everyone is a one-on-one hour consultation to talk about how this can apply to you and answer more questions. But before I do that, let me, I don't know if Becky, you're coming back on here. I was going to go over some questions that I saw had come through. It says here self-directed IRAs and Roths are standard accounts at major brokerages. Absolutely are standard. In fact, well, I'd say what standard is IRA and Roths are standard. So it's interesting now. A lot of the major brokerages are saying they have self-directed IRA accounts. They call it that, but you absolutely cannot self-direct your funds into what you want. You go and ask Charles Schwab, I want to invest in a note or I want to invest in a investment property. They're not going to let you do it. Or you call them and say, look, I want to move part of my IRA accounts and put it into a business. They won't let you do it. So they're using the word self-directed often. It's more of a marketing term, but frankly, even though it's offered, most of them will not allow you to do it. So, anyways, let me go over some questions here that I'm looking at. Can you give us some idea on the return on investment? So, typically, those that are doing the banking product, I would say on the low end they're making 7% annually, and on the high end they're making 11 or 12. I would say 90% of our trustees, first lien positions where they're banking, our clients are making 9%. That's what I'd say about 90% of our deals. Let's see here. Yearly paperwork forms. There's an option if you want to open up a 401k at Horizon Trust. We can actually help you with the paperwork. There's a small annual fee for that, or you can do it on your own. I would recommend having us, our compliance and guys do it for you, definitely. How many self-directed Roth IRAs can you have? You can have several. I've got many people that have several accounts, and so you can only put so much away per year. But that's a good question. You can have several. If you have one, you can open another one. You just can't contribute to each one. Your contribution. Can you buy gold in an IRA? Is a question I got. Yeah, you can actually buy gold, but you can't buy collectibles kind of gold. The kind of gold that we hold for clients that want to buy gold with their IRAs, the gold is actually not held in their possession. It's held in a depository in Maryland, I believe. A company that does it for a living. They've been doing it for 25 years. They will hold the gold for you using your IRA funds to purchase it. Let's see here. What happens if you want to close your account before retirement? That's up to you. It depends on where you're going to move your money. If you're going to roll it somewhere else and keep it in a tax sheltered vehicle, then it doesn't matter. You can roll it wherever you'd like. Let's see here. protect recent wayward banking activities. Didn't already answer this. How do you know your loan is secure? Interest is good, but you know. Okay, so I didn't understand the one question, Pippi, but and by the way, my email I'll give you just my personal email. You can go to Greg Herlean at Yahoo. You can go to my Horizon, Greg at horizontrust.com. You send me an email, and I'll personally get back to each one of the individuals. But Greg Herlean at Yahoo or Greg at Horizon Trust, I'll get back to you. Let's see here. How do you know your loan's secure? You know your loan's secure if you're the banker and you're lending. You know it's secure because your money. You get closing statements. All the monies. That's one important thing we do at our lending company, CapSource. We never touch client funds ever. You will never write a check to our company. All monies go directly from your IRA or from your account to title. Your funds then it all closes at title, and then title will send you loan docs. Will show your name on there with your percentage. You can actually go to the county wherever the loan's at and find that loan, and your name will be on there recorded from that partial. Let's say it's a $200,000 loan, and me and let's say James G, you and I each put $100,000 down. We'll be on that title for 50% each. Can you buy a specific property picked out by the client? Yeah, you can buy whatever property you like using a self-directed IRA. Absolutely. Let's see here. Becky, thanks for putting my email in there. If you've already made a contribution on each of your Roth IRAs and you open a second Roth IRA, that you could not make another contribution. No, you cannot. You can only make that much contribution per year. My point of having multiple Roths is if you have $50,000 in your Roth and you want to move half of it to a self-directed Roth, you can move half of it and have two Roth IRAs, but you cannot make more contributions than what the law allows. One of the good ways of doing due diligence on our company is, you can go to the Nevada Mortgage Division. Someone asked about due diligence as far as the lending company. You can go to Nevada Mortgage. We're a mortgage broker. Been licensed there, like I said, for 19 years. And you can see if we're in good standing or not. We also, if you send us your information, we'll send you all kinds of different things on some due diligence on our company, our ratings, etc. For the trust company, we're audited every year by the banking division, financial institution in New Mexico. So you can find us there as well. In case of default, who's responsible for taxes and maintenance? You would be. When I say you, we've never had a case scenario where our investors actually paid those things. Though you would be responsible, what we've always done as the broker that finds the loans and originates the loans is we've always paid all the foreclosure default fees and maintenance fees and maintenance and taxes on properties going through the process, and then we'd get paid back when the property sells. That's how we've always handled it. But it doesn't mean that has to be done that way. You are the lender and owner of basically the property. If it's foreclosed on, you take it back. But it doesn't make sense for us, if there's multiple investors on a loan, to have all the investors handle those kind of things. We like to do it on their behalf. And it's our advantage. People ask us, so how do we make money? From a lending perspective, we make money by points. So we'll originate a loan, our investors will fund it, and we get points at closing. So we'll get anywhere from 2 to 3 points typically on a loan. But the important part about that, for you to understand, is we want the loan to pay off. And we want it to go as planned because our business is for it to pay off, and then you reinvest with us on our next deal. And we get paid points again. So we want deals to go as planned, be secure, be paid off. If it goes through the foreclosure process, we're going to hold your hand through it. That's what I think where we shine. We're the largest lending company in Nevada, hard money lending company in Nevada, and we weren't in 2007. All the big ones went out of business. They stopped talking to their clients and investors. What we did is we handled all of it. We went through the foreclosure process. We dealt with all of it, paying the taxes, and we went through the process and helped all of our investors, and that's why today we are now the largest. I feel like people need to see when things go bad how we shine, because that's where we're really good. Anyone can do well when loans go well. Does it work in Canada? Gene, you can invest as a Canadian in trust deeds, yes. But if you're saying can you self-direct, I'm not sure which subject you're asking the question on. In Canada, they have their own RRSPs where you can self-direct as well. It's a lot more strict. There's not as many options there. Can you finance a construction loan? Absolutely. We finance a lot of construction loans, yes. Is our account FDIC insured or eligible if Horizon Trust goes bust for any reason? Absolutely. Great question. When your money sits at Horizon Trust, as long as it's there, we bank with all the major banks. Your money is actually sitting with Wells Fargo, with Chase, with Nevada State Bank, a couple of the regional banks. Every account is insured up to $250,000. So just like if you was at a bank, when your money sits at Horizon Trust. Now, let me be very clear. Once you tell us to move your money into an investment from Horizon Trust to title on a deal or stock or whatever the case is, or a business, it's then not FDIC insured. That's obviously now an investment. The IRA, if it were to lose its money, it would not go back into the account. So, how are we doing as far as questions? I feel like we've nailed a lot of them. Becky, Mr. Bigelow, tell me how we're doing here. Let's see here. I don't know if I got too many more or if I've hit all of them. Let's see here. 62-year-old is not too old to use a Roth IRA. Nope. Nope. I feel like I've answered most of the questions here. Good questions. So, look, reach out to us. It's a gift for everybody here. Waiving the setup fees is a big deal, and we'll help you. We'll do that one-on-one consultation with you and get those books out to you and really give you some education on what people are doing. My goal here is that you go out and take advantage of it. Create passive income. Create some other stream of income besides having to work for it and maybe having to do it, look at it every single day. Being a banker has really created, freedom for me to do what I want to do, both inside and outside of my IRA. It's definitely changed my life. So, if there's no more questions, let's see here. Let's see here. I don't know what fee means. I got a question here, but can you discuss how you and your private lenders weathered the recession? Yeah, I can tell you. It kind of goes back to what I mentioned before. When before 2007, all of the loans we had, less than 1% went to default. In 2007, 8, and 9, when the loans all went to default, all of our lenders. Now, this is us and every other company in most states, all states in the West, and a lot on the East Coast, especially Florida. All loans went to default, meaning they would stop making payments. And so what happened? In this example, it's perfect to talk about the risk. This is the worst thing that we've seen in real estate happen in those years. And how were they affected? Well, our investors ended up owning properties, and they ended up being managed by us or other individuals, and they worked through the process, meaning they were either rented and the rental income came in through the process of 18 months or 12 to 24 months, and then they ended up being paid off, selling. For those individuals that actually kept the assets and just got some rental income for 2 or 3 years and then and waited till 2011 and 12, they did really well. Not only did they get their money back and interest, they made money on it. For those individuals that took the property back and wanted to sell it right away, when the market was still low, they took some losses. But mind you, the 2 years before that, they were making 10% in their money. So they ended up taking 10, 20% losses, but if you include the interest they made on it, it was more like a wash. So anyways, what else? The setup fee. Setup fee for an IRA is typically $350 one time, and then the annual fee is between 50 and 70 basis points, less than 1% per year. I said I'm going to waive the fees for all those individuals in this call. So that's for the IRAs. There is no fee when lending. The lending CapSource company, we make our money through charging points to the borrower. The borrower pays us for originating and finding the funds to close on the loan. So 100% of that rate in your document goes to you or goes to your IRA. Great. Any more last questions here? Becky, how are we doing? I think we're about done here. How does Horizon Trust make money? Just that annual fee. That's it. So we have we make $250, $270 an account per year. That's how it makes us money. All right, who do I hear? Is that you, Steve?
I'm on now.
Okay.
Yeah, looks like you got all the questions. So with that, everybody, if you need places to put some of your non-trading money where you want to get some good income, take a look at Greg's information. It's a good alternative, and I, being in the real estate business years back, know that you can make very good money being the lender against real estate. So I guess if there's no more questions, Greg, thank you very much. Everybody take a look at his information. It's got some very viable, good elements to it for those that need to set money someplace where you're going to get a good income.
Perfect. Thank you.
Thanks, Greg. Thank you, everybody. We'll see you in the chat rooms.